Good afternoon and welcome to TBR's webcast, serving two types of customers to drive growth, insights from TBR's Business Intelligence Software Vendor Benchmark. During this presentation, our analysts will deliver high-level findings of our BI Software Vendor Benchmark, applying insight into the market that will help you make better investment decisions in this explosive market. I'm Justin Surgeon, and I'll be your host for today's webinar. As customers expand business intelligence software deployments, rather than scaling out significant net new purchases, BI software vendors continue to shift investments to engage not only data-centric IT purchasers, but also line of business stakeholders. Vendors that are most agile in aligning their portfolio and messaging to the needs of their buyers will achieve the most growth in this segment. TBR's Business Intelligence Software Vendor Benchmark examines performance of frontrunners, both revenue leaders and market disruptors, and offers analysis and insights around their strategic decisions. In the next 45 minutes, we'll cover the drivers of BI software adoption, how vendors are positioning to capitalize on demand, and how customers are engaging with vendors before taking questions from the audience. Before I pass this over to Matt and Elizabeth, there are a few housekeeping items I'd like to cover. First, we will be recording today's session and posting it on our YouTube site, TBR channel. We encourage you to visit our channel to watch the presentation or any of the others we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Matt and Elizabeth will address them at the end of the presentation. Or, if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to either the analyst or myself at the end of the webinar to set up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of conclusion of the webinar. You can also find the slides, as well as our thought leadership pieces, other webinars, and commentaries on our SlideShare account at www.slideshare.net/TBR_market_insight. We'll also share all social media links with you again at the end of the presentation for your convenience. Now let me introduce Matt Healey and Elizabeth Hedstrom Henlin. Matt is our principal software and service analyst, and Elizabeth is our lead analyst covering enterprise and BI software. They've been working closely with the vendors covered in the report to understand their business models and strategies. The combined experience and perspective brings a detailed and actionable perspective of the opportunities in the market. And with that, let me hand it over to Matt.
Hi, thank you, Justin. This is Matt Healey, and anyone who's attended any of the webinars I've been on in the last, few weeks to a few months realizes that my job is to provide a macro overview on what's going on in the market and then pass it off to one of my excellent team members who actually can go deep in terms of all of the overview. So we're not going to deviate from that format because I happen to like it quite a bit. So from a macro perspective, what we're really seeing in terms of BI is the evolution of this market almost from a spectrum perspective. You can argue, and probably argue successfully, that analytics and business intelligence has been going on since IBM put the first vacuum tube in a mainframe back in the, before I was born times. And all we've been doing since that point is increasing the power, the strength, and the speed of the analytics capabilities, which has allowed us to apply analytics to a broader and broader segment of the market. What we've seen over the last 3 to 5 years, and the reason it's really begun to explode onto the scene, is the convergence of a few forces. And basically those are the ability to store data because of how cheap storage has become, the ability to process data because how cheap compute has become, and the ability to gather data given Internet of Things and the ability to capture much more of that data and information. So we've got a richer data source, the ability to store that data source, and the ability to analyze it. So what that is doing to the market is it's creating a very interesting kind of spectrum. We see a lot of applications and a lot of types of BI that have been going on for a very long time, and as such are dominated by very large players like SAP and Oracle and Microsoft and IBM. And those are the traditional things that people think about: the dashboarding, scorecarding, reports, spreadsheets, all of those pieces of the taxonomy. But as you combine these four forces, what that basically does is it opens up a green space for those vendors to move in, but also, and much more importantly, for smaller vendors to move in. You now have people who are looking at this data set and saying, look, visualization has to become a very important component. So you see companies like Tableau, Click, and Burst all getting in there around how do you visualize and understand data. You see an entire explosion in the open source and unstructured area around Hadoop. So you see Cloudera and Hortonworks taking radically different approaches to that particular market. And, you know, we have a hard time benchmarking them because they don't necessarily fit any of the established business models, but there's definitely something there, and they're definitely both of them leading in their respective business models, even though the models don't fit in our framework, so they're kind of hard for us to benchmark. But there's a really good story for those two. And then you see people with machine-to-machine and the flat file architectures and people like Splunk out there really trying to look at a specific niche. So what you've seen when you look at, and why we're saying serving two customers, is you have very mature organizations that are tried and true and understand what they want to do, but then you have this entire emerging segment, which is really where we're seeing a lot of very innovative solutions from both large companies, but don't ignore the small vendors in that area because they play a very large role in it. I think against that lens, I'm going to pass it over to Elizabeth, who can then go much deeper into, you know, kind of the taxonomy and what we're seeing from a software perspective.
Thanks, Matt. And yeah, building on Matt's narrative, I'll draw your attention to the slide that's currently on your screen. This is the depth of TBR SBI Research Portfolio, and I think where we take a unique approach to this market, as Matt pointed out, is that we do successfully benchmark vendors that on their merits don't necessarily resemble one another that tightly. But what we see when we look at things from a business-centric point of view is that in the end, vendors in this space are in it to make money. And when you start from that fundamental assumption, you'll see that vendors, especially the vendors that Matt mentioned, Burst, Cloudera, Hortonworks, are taking a segmented opportunity and professionalizing it, to borrow the word that Red Hat uses about the broader open source movement. They're taking an idea that was seen as on-premise, established and stayed, and reinventing it in the minds of customers and consumers. And it's an interesting pendulum of buyer behavior, and Matt and I just delivered a webinar last week on our recently published BI buying behavior research, as well as vendor reaction, and that's where the business intelligence software vendor benchmark came into being, and it really, we see a fascinating movement back and forth between those two constituencies. What do buyers need? How are vendors reacting? And then what is the follow-on action that helps vendors deal with the threat to their own profitability and growth? So with that, moving ahead to a quick pass through our taxonomy. I see some familiar names on the phone on the attendee sheet in terms of folks that have been with us before. But just to take a moment and look at these taxonomy points in greater detail. When TBR launched its business intelligence customer research, we looked to buyers to tell us how did they enter this market. And as Matt pointed out, it really became an expansion from existing capabilities. How do you first know your data? And that's what we deem basic BI tools. Those are the reporting, scorecard, dashboarding, data discovery opportunities. How do you know what you have? Once you expand from departmental to enterprise-wide looks at that, and this is again what the buyers told us in our recent research as we shared last week, shows that those behavior patterns haven't changed. It's just how tightly they're focused. You look at advanced tools. How do you change your business? Data visualization, predictive analytics, content analytics, and so on. And then that spectrum really colors the other two categories, which are data warehousing, which we define as data warehousing and information management in support of business intelligence, and that's dictated by the guidance we receive from the market in our primary research. And finally, BI applications and platforms. And this is, I think, the clearest indicator of the vendor-driven reaction to buyer behavior, because we watch and see the major multi-line vendors, SaaS, IBM, Oracle, SAP, reacting to folks like Burst, Tableau, Cloudera, Kexen, and either acquiring those firms, for example, in the case of Kexen, and integrating that offering into broader install bases, or in some cases like Oracle's acquisition of Endeca, broadening what already exists and creating a multi-function, single SKU offering that can readily expand across an enterprise environment.
And at this point, I do want to stop and call out one critical thing in the taxonomy, because I used to be an MI and CI for a networking company, and so I'm used to the fact, and I'm cognizant of the fact that most of the people on this webinar will take this data and compare it to some of the lesser research houses like, IDC and Gartner and Forrester, and the data won't necessarily line up. The critical component is they consider it the entire BI, the entire data warehousing market, whereas we go in and we look at the portion of the data warehousing market that is directly related to analytics. Now, you can make an argument, and we get into semantics, that a data warehouse by its very nature is optimized for write-based capabilities, which then by its very nature means you're doing some form of analytics on it. But we really kind of cleaved that out, because if you've been in IT for a while, what you realize is that there's a lot of installed systems that are not being used the way that they were designed to be used. They're legacy from whatever. We've still got it going. Why should I bother changing it? And so it's not really in support of analytics. So we do take that data warehousing market and carve a portion of it off.
And that's where, when you look at how we analyze this market, it really, we try our best to take our benchmark and our customer research in tandem, because that's really where you see the truly holistic story around business intelligence. Where are customers in their journey? A quick side note, within the benchmark, as some of you know, we do look at business intelligence and analytics engineering systems, and that is, for us, we see that as a delivery method, and that really answers the question of vendors that have systems upon which they deploy business intelligence software, what portion of their revenue is being delivered on top of a box, and what is the hardware revenue that follows it? And so I'll fly through this a little more quickly here, but as you can see, these are the subsegments that we link to our broader taxonomy. And again, this was driven to us by buyers in the market as their path into broader business intelligence deployments. So from applications and platforms and basic tools to advanced tools and data warehousing. So with that, into the current market. I think for those of you that joined us back in April when we brought to you our fourth quarter findings, I think the thing that Matt and I would both highlight for you is that this is a market that is continuing to change. Though growth is starting to slow overall, you're really looking at a market where there is opportunity to be had at someone else's expense. And by someone else, I'm speaking specifically from a vendor-centric point of view. It doesn't take much of a major multi-line vendor's install base to make a burst or a good data very happy. And that's where you start to see vendors taking a look at how do we change our businesses to ensure that we're not only continuing to support the IT purchaser, that data jock who's been with us all along, but their line of business stakeholder. And for those of you who were with us last quarter, we talked a great deal about sales and marketing and research and development as indicators of how vendors are targeting this market, and we'll do that again later on. But BI does not behave like cloud. BI is a software market segment. As such, there are a lot of behaviors that we're seeing that are consistent across market segments of software, and we look at the holistic market. Line of business buyers are here to stay. They are watching over your core IT evangelist shoulder. They want $3 of return on $1 of investment, and they like it very quickly. And for those of you who were with us last week, our business intelligence customer research pointed out that of our respondents, nearly 2/3 of them expect to see return on current business intelligence investments in under 2 years. And the bulk of those folks want to see it in 1 to 2 years. So it's really critical now for vendors in this market, that, as we see, to be able to stay tightly tied with buyers' portfolio, what they already have, and messaging needs. How do they sell this internally to their constituents to keep your vendor customers loyal over time?
And so I want to dovetail in here just a little bit. For the smaller vendors, the people, and by smaller I mean the people who are not SaaS, SAP, IBM, Microsoft, or Oracle, you really need to be very deeply engaged with the LOB. The problem that you're going to face if you have an IT solution sold to IT is the IT department has very long and deep established relationships with those 5 vendors that I just mentioned. And so extending their capabilities can be very easy and a very easy sell within the IT department unless they are disgruntled and upset with their incumbent vendor. Whereas the LOB has less attachment, I think, to those big incumbent vendors. So if you are one of these smaller vendors, I really think that the LOB needs to be a critical area of focus, and being able to speak to the LOB in terms of business outcomes and business objectives is critical.
Absolutely, and we've hit, as Matt and I tend to do, we bucket a lot of targeted themes into one broader discussion, but I'll just note that we'll talk about corporate investments at the end of our talk today. And we see this market as a whole really set for some it's maturing, as we said, but it's consolidating, and then it will grow, and then it's consolidating once again. And this is where we see the reason for the consolidation. 2013 was a growth year. 2014 is a consolidation year as vendors across the board either solidified the portfolios that they have or look to acquire, as in the case of TIBCO and Jaspersoft, to really take their core portfolios to another level of heterogeneous integration and attractiveness, therefore, to buyers, because your buyers are smarter now than they've ever been, and they know, smarter in terms of they know what they want, they know what they expect, and they know they have an infinite number of vendors to seek it from. So long-term revenue opportunity for everyone in this market really, again, hinges on current development plans. So as vendors are looking right now at better, more effective sales and marketing spend in support of what they have, being able to balance that look at the broader roadmap, and also understanding that your buyers are very intrinsically tied to cloud vendors and other segments, and as a result have more expectations now of roadmap transparency than they've ever had. Keeping that R&D train rolling, whether it is organic or inorganic, is where long-term opportunity in 15 and 16 is going to come. So with that, we'll go a little bit deeper into the outlook. As you see here, we have some broader growth, and you'll note, by the way, at all of these graphs, our benchmark is set to publish next week, so you're getting a preview of coming attractions. You see, especially in 3Q14 and 4Q14 projections, we're looking at a world where the growth rates are starting to slow down, but that gap is starting to close between the vendors that we cover in this landscape and the broader market, emphasizing that while there is some long-term growth coming, and we see it really tied intrinsically to content analytics and machine-to-machine data as two of the nearest term opportunities, the broader market is pretty well set and established. So what do we see for all of you on the phone? Understand that your buyers are looking at these advanced tools as their opportunity for business expansion, transformative ways of changing how they run their business and grow their business. And whether you are in that advanced tool segment, choose to enter that advanced tool segment in the case of Dell Software with their purchase of StatSoft in 1Q, or understand that you can ally yourselves with vendors that are well entrenched here. Stay as closely tied to that innovative look at data as you can to sustain growth across the balance of this year. Now, let's take a look at this market in some greater detail. And this is one of our I call it our placemat graph, because this is where we put everybody, the apples, oranges, lemons, all on one graph. Because for all of you, we really look at this as the vendors making money in this segment. Who's disrupting, who's established, and where is the growth and opportunity coming from? So taking a look at these vendors on this graph, the absolute dollar growth runs the horizontal graph, the year-to-year revenue growth, absolute dollar year-to-year growth, I should say, and year-to-year overall revenue growth I think as we've watched this market across the last 3 webcasts that Matt and I have done here, you start to see vendors really pulling away from one another. When we launched this benchmark, everyone was clustered right on the axis, and then there was a very distinct divergence of 2 groups at the axis and above the axis. And now you see vendors, and not just the multi-lines that we've talked about, but the other vendors in this space really starting to pull away. Folks like Splunk and Tableau, I mean, it's easy to drive growth when you're in the right place at the right time, and that's not to diminish the accomplishments of those vendors. I think, especially in the case of Tableau, we just got back from Tableau conference. It's an interesting balance they're striking between taking a 10-year record of experience and at the same time operating as a startup in the post-IPO joy and rapture and unpaid media attention. But I'm thinking also of folks like Google that have taken their Google Analytics offerings and really let them run almost on their own without a whole lot of attention whatsoever. And folks like MarkLogic and Dell Software who are taking very targeted looks at the database, at database management and data management, and pivoting their alliances and their marketing narrative to capitalize on customer interest over time. And for those vendors in particular, I would highlight that I think something they've done very well is take the approach that it's all simple, that no matter what you need to integrate, the Toad brand, I think the retention of the Toad brand in the case of Dell Software was a critically sound choice for them, because it's Toad for Oracle, it's Toad Decision Point, it's a consistent level of looking at the complexities of business intelligence under one umbrella, Dell. And then when we look at folks like TIBCO, who just in September they were acquired by a private equity firm, those are companies we see that are going to capitalize on the Dell privatization model, the BNC privatization model. How do you take a robust list of assets, because I think TIBCO's business intelligence portfolio has suffered from a lack of relative attention in terms of the broader TIBCO business. Spotfire, we see it as a sound platform, but one that has not been able to take any innovation brand in the minds of customers. So we expect to see TIBCO moving, probably not by the end of this year, but certainly by the middle of next, moving away from the axis once they really rediscover their own story of growth and helping customers transform their business. And then Matt commented earlier on Burst and Good Data, and I think those are the vendors that have a lot of room yet to run. They've figured out their story, they've figured out what works, and they have a loyal core of funders backing them. Domo would be another one that would jump to mind in that regard. And I think they will be stepping onto the main stage, and in the case of Burst in particular, we see them as well positioned to stay there because they have that business story and they have that simplicity, heterogeneity, proven portfolio ready for battle with the broader multi-lines. So that's where I think the major vendors like IBM Software and SAP, Microsoft, Oracle, and SAP are looking at, they're not looking at a lot of these multi-lines because they're used to a world where they compete on function and they compete on head-to-head combat. The slicing away at the installed base, I think, is going to be the big 2015 story for this market. There's a lot of customers that are going to be looking for an incremental purchase here, an incremental purchase there, and there's a lot of vendors in this space that are hungry for more.
Yeah, I would agree with that, and so that's one of the things that I keep coming back to on the, if you're a small vendor or a large vendor, how do you get that incremental revenue? If you're a large vendor, you're looking at extensions to your existing installed base. If you're a small vendor, you're looking at targeting some of the specific use cases, verticals, and then going into that area. But in addition, and we got into this on the customer webcast about a week ago, you need to demonstrate that you work with the installed base vendors. So if you are a small organization, your solution can't run independently of SAP or Oracle or Microsoft or IBM, because those vendors are going to be in all of your accounts, and so you better work and play nice with them, at least from an interoperability perspective.
Exactly. So with that, I think I'll also highlight for those of you that are new to us on this call, this is a very, very short slice of a very, very long document. So We are happy to go in detail in private discussions with all of you around these segments. We're only going to profile the basic and advanced tool segments today, but we can definitely go into greater length. So for those of you, if you don't see yourselves in the next couple of graphs, it's because you're probably in the applications and platform segment, and we're happy to discuss that with you. Reach out to Justin at the end of the webinar, and we can set up a private time. So when we talk about the impact of the line of business user, this is where we see a lot of established players taking advantage of reputations they've already built, until you look at folks like Actuate and ClickTech and Pentaho. Because when we look at buyer behavior in this space, a lot of buyers self-identified to us in our first study and in our most recent study as very hesitant to expand purchasing. And the problem is, from then to now, they know they're late. They know they're late. They know they're lagging their competitors. So they know that the price point for what they have to do is probably even more significant now than it would have been 18 months ago. Where do they go from here? They need a trusted advisor. And that's where the folks at ClickTech, I think, have done a particularly good job at creating that proven reputation quickly so that they can take share and grow in a market that is so very visibly dominated by SAP Business Objects, Microsoft Office, and then Oracle in terms of their work and acquisition of the Endeca portfolio. I think if you look at this graph, by the way, on the vertical axis you're talking about year-to-year revenue growth. On the horizontal axis you're talking about our estimated operating margin for these segments. Where I think it's fascinating to watch the folks like ClickTech and Salient and Teradata in particular make some headway is that they're carrying a lot of operating expense directly in this segment that some of the major multi-lines are not recognizing, because when we talk to the vendors in this space, we're really targeted at a holistic look at their business. So we don't just model Oracle and business intelligence, for example. We model Oracle across the entire software stack. So in a world where Oracle can embed Endeca in a renewal of J.D. Edwards, and J.D. Edwards and the business applications business is where the operating expense is being borne, kudos to Google and ClickTech and Salient and Information Builders for continuing to drive a relatively competitive operating margin against vendors in this space that have a lot more to bear, bring a lot more to bear, excuse me. So we've called out a couple of leaders here, but I think the overall migration away from the axis relative to last quarter shows that vendors in this segment in particular have taken the hand of those late BI customer adopters and brought them into those initial reporting and dashboarding deployments. And I think you can expect to see a lot of hay from SAP in the coming quarters if executives' activity on Twitter is to be believed. There's been a lot of direct combat against folks like Tableau and its impact on. So I would expect to see IBM, SAP, Microsoft really looking at highlighting their fundamental capabilities and trust in this space going forward. So from basic tools to advanced tools, and again, you'll see that these graphs are relatively less crowded compared to the aggregate graph we showed you at first, and that's because we are very focused on those vendors that have single point or dual point products in this space. So Dell, you will see on this graph in coming quarters, as Dell acquired Stasoft in 1Q14, they don't have a full 2 quarters of revenue to bring to bear. So we noted the estimate that we saw roughly $600,000 in revenue for Dell attached to that acquisition, which would place them very competitively with the cluster of vendors that are ahead of the averages. Something I noticed I forgot to mention, the dotted lines on these graphs represent the vendor medians in this space. So just showing where vendors in this space played and where everyone is performing relative to not just the axis itself, but the average across the segment. I think that we talked a little bit about this at the start when Matt and I kicked this off, but predictive analytics and data mining and data visualization are really the 3 drivers that we see very actively creating opportunity for vendors right now. but content analytics is the revenue opportunity going forward, because that's where we see the biggest potential intersection with the cloud. There's a lot of marketing clouds going on right now that have some social media comprehension tools, but those we don't really see as yet have come fully into prime time in terms of provable deep analytics that can integrate back to on-premise deployments. And that's, I think, when you can start tying the Oracle Marketing Cloud into Oracle Database 12c, that's when you really start to see cloud-delivered business intelligence, in my opinion, become something more than just a delivery model.
I don't have anything to add. I'm sorry.
That's unusual.
Usually, I mean, look, you all been listening to a bunch of webinars, or people have, and I've always had something to add, but Elizabeth basically just stole all of my points in the last statement. So if you want, I can say what she just said using different words, but I don't think that's a valuable use of people's time.
No, and for those of you who've been with us on a couple of these, you'll have to laugh, because clearly this is Matt and I sharing a wall in an office coming to fruition that we've really just fully started to share brains. So let's go on to the vendor business model investment. Now, for those of you that are new to us, I'll highlight that there is no judgment in this quadrant. What we have here is a quadrant of where we see sales and marketing and research and development as a percent of overall revenue for the quarter. So if you are to the left of the vertical line, you're focusing on sales and marketing relative to R&D. If you're to the right of the vertical line, you're prioritizing sales and development. So basically, if you're in the upper right, you're spending. You're spending. You've got money in R&D, you're ahead of your peers. You've got money in sales and marketing, you're ahead of your peers. And the quadrants then move accordingly. So I think our medians, by the way, are calculated across the next two graphs. We have a look at the whole market here, but we wanted to break it up into the multi-lines and some of the more established players, and then the disruptors. And I think as we highlight this group of vendors in particular, the fact that there wasn't a lot of motion between 4Q13 and 2Q14 shows that the vendors that are investing in this market are investing in this market to stay. When we looked at the trajectory last quarter, everyone was falling backwards and to the right. And you know what? In a fourth quarter, that's where everyone has a higher share of revenue. So we expected everyone to fall down to the left. Everyone's moving, either holding steady or moving to the right. So this is a market that vendors see real opportunity in the multi-line vendors, and I think also see some very real threats from disruptors. So expect to see these vendors not going anywhere for the time being. I think we'll call out Informatica in particular, because Informatica's information management portfolio is one of the deepest and I think most proven in this space, and I think they are about to really come into their own in terms of the BI customer base, because the ability to heterogeneously manage multiple databases and multiple data sources on and off premise, I think has finally, because of the ongoing investment of the major database players on getting databases cloud ready, cloud delivered, cloud enabled, I think the information management vendors are really going to see that rising tide that lifts all boats uplift from that activity. And then when you move to the multi-lines, I have surprising news for all of you. Splunk is focused on growth. I'm sure this does not come as a shock to anyone, but this is a vendor that is taking the Salesforce.com model, as our cloud colleagues Jillian Morandi and Alan Kranz call it, of spending to get bodies in the seats and spending into a negative operating margin and running with it. And it's working for them. I think I said this to some of you on our last webinar. I personally think machine-to-machine data is where the vendor is the concept that is going to take big data out of the everyone's got a slice of it and into something that is real, quantifiable, and meaningful to a customer. And so I think they're in a very interesting place at the right time. I think it's fascinating to watch folks like the cluster in the top right of Actuate, Burst, Board, Cloudera, and MicroStrategy all of those folks, either in the case of Burst and Cloudera and Board, have figured out their niche, and they're making hay with it. And then there are folks like Actuate and MicroStrategy that realize that they're not quite in that line of business place and are focused on getting there, both through sales and marketing and through actual development to make those products simpler to deploy. But I think it's worth noting that everyone in this quadrant too, staying put. So this is a growth opportunity for them. They understand that they have a story to tell, and I think that the multi-line vendors should be very wary of a lot of the players on this quadrant, because they're going to look for tier 1 customers of the multi-line vendors to get a footprint and use those customers to death in what we've called in other webinars the string of pearls approach to customer growth. They can't spend like an SAP or an Oracle on sales and marketing, but they'll make darn sure that if they manage to win a major financial firm on Wall Street, that they put out that press release and shout about it to the rooftops.
Yeah, and so when I kicked off and I did the macro overview and I talked about the smaller vendors, really looking either with lobs or with verticals or with a certain type of technology, and focusing on that particular thing and not trying to be all things to all people. That was kind of the undertone that I put in there. If you take a look, one of the vendors I call that was Splunk, who basically said, look, we're going to do machine-to-machine data, and we're going to do it in this way, and go. They are clearly executing against that strategy. So just because this is a spectrum-type market with a lot of very mature, very large vendors doing a lot of things, you don't need SAP, IBM, Oracle, or Microsoft's budget to compete with those guys. Just don't try to compete on their terms. Nobody's going to out IBM, so don't try. If you play IBM's game the way IBM wants you to play it, you will lose. But if you find an area that's underserved by them, or a lob or an application that's underserved, you say, you know what, I'm going to go this way. You can win, and there are examples of that. Splunk is one. I think Tableau and Qlik are in that area. I think Hortonworks and Cloudera are probably going to be in that area, although the business model but the divergence of the business model makes me reticent to call a winner in that area, but I definitely think those two need to be looked at and need to be paid attention to.
And I would add that DataStax in our recent customer research was one of the only disruptors that came up in the discussion of in-memory. And so for the fact that the big dogs are taking so much air out of that metaphorical room, the fact that DataStax even made an impression speaks volumes for how effectively they've been making their case in the market.
Yeah, that's a good point.
So with that, when we look at our projections for 15 and onward, I will say that we're stealing a little bit of our own thunder for our software vendor benchmark webinar on at the end of the month that talks about not just the performance of the vendors across the enterprise software landscape, but where our coverage of those vendors is going in the coming quarter. It's growth at any cost. You serve those two groups of customers, those very mature buyers and those very late comers, with equal agility, and you are positioned to drive growth, both in terms of the multi-line firms being able to embed that business intelligence capability, not just into solutions, but into broader renewals and overall marketing messaging. But in the case of the targeted vendors or pure plays, we've switched back and forth across this as we've gone. But telling that business value story, highlighting the heterogeneity of your offering in terms of keeping that integration simple, fast, and easy. And simple and easy are not necessarily one and the same. That's where you can raise your profile relative to the multi-lines. And with that, I'll hand it back to Justin.
Yep. Right. We have a couple questions here. The first is, where is the opportunity for growth in advanced BI tools, and also opportunities for disruption as well?
Okay, so for advanced BI tools, this is an interesting area because this is where I see those kind of either industry-focused or architecture-focused or LOB-focused type solutions. If you were to go back and look at our customer the customer webinar, you saw that all of the basic functionality everyone pretty much expected. The areas for growth are in finding niches in specific verticals that are being underserved. Keep in mind that this market isn't going to behave the way other innovative markets have behaved. So if you go back in time and think about virtualization, where everyone basically moved, all verticals basically moved forward with virtualization at about the same speed because there were hard infrastructure benefits. In this market, you're seeing some organizations that have had a higher use of analytics move faster, some that are, adopting it slower, and then you've got laggards behind them. So the trick is finding where this growth is figuring out if there's a vertical you want to go into, where are they? If they're banking, financial services, securities, fraud, retail customers, then they're very advanced users and they're going to want to be at the bleeding edge. If they are some of the more lagging industries, then they're probably not on that bleeding edge, and you probably need to educate them or provide a solution unique to them where you can demonstrate the benefits. Same thing across various types of LOBs. Ones that tend to be more engineering and technical focused tend to understand the use of analytics, and ones that aren't tend to not. So it's kind of, I wish I could give you the, here are the 3 hot spots, but like any analyst, I'm going to say, well, it depends.
And I think I hit the cloud button pretty hard in the overall discussion. So in the interest of time, Justin, we can move on to the next question.
Okay, and I'd like to point out, if anybody has any questions, any other questions, please send them through now. But we do have another one here. Who are the vendor BI software winners in 2015?
Tableau. Definitely, I got to put my money on Tableau. I got to put my money on, I'll pick a Multiline just to be controversial, but to be clear, I think the pure plays win on growth, the Multilines win on not eroding. And I think that the company to watch in this case is IBM. I think IBM has a significant number of assets that they have yet to really bring out into the market in terms of a more public discussion, and I think that the acquisition of Quadrants and the DB2 Blue offering from the database perspective, but its impact therefore on memory and data warehousing shares for IBM overall, I think have yet to really come into focus.
I'm gonna agree with Elizabeth on Tableau. I think that they're a player. I think that Splunk is in a good spot. I think that SAP is in a good spot of the multi-lines, but that basically is a HANA play. I know HANA is brutally expensive. If there's SAP people on, I'm probably going to hear about it real soon. But HANA is an expensive solution, but it's a very powerful solution. And I think that, as Elizabeth said, they're going to win by not losing, by expanding that capability.
Okay. Okay, so where does the SI presence start to impact software vendor install bases in the segment over time?
So I'll put in a plug for our colleagues, Jen Hamill and Patrick Heffernan, who are taking a look with Matt at the BI professional services market tomorrow in our inaugural BI professional services vendor benchmark webinar. But I think that the interesting thing here for me in looking at the professional services impact in this space is the advent of the social, mobile, analytic, and cloud practices inside of the SIs. When I see folks like Atos making incremental IP purchases around software, I don't see a reason why you don't see an Accenture bringing its own analytic software in-house in 2016 and starting to deliver that as an option as their customers continue to ask for incremental expansions. Sometimes I think it might just be a little too complex to choose from the vendor decks when you know you can manage some small IP on your own.
Yeah, and I think that we're going to cover this probably tomorrow in the BI services webinar, so insert shameless plug for that here. What we're basically seeing in a lot of the customer interviews and the customer conversations we've done is that this market, I think, is in the next 12 to 18 months going to shift from a lot of the services being provided by the vendors to provided by the dedicated global systems integrators and more of the dedicated services providers. So I think that that's the transition that's going to happen over the next 12 to 18 months, and Jen will be going over that in great amounts of detail tomorrow, so please tune in for that. That one will be good. Once again, I get to do color again, so hopefully that's a plus and not a minus. Even if it's a minus, Jen's good enough that you should attend anyway. So anyway, I'm going to turn it back to Justin for any final thoughts, comments, or questions.
Yeah, no, I think all set. Thank you, Elizabeth and Matt. Thank you, everybody, for your questions. You can follow Matt on TBR on the Twitter handles listed here. And as I mentioned about the webinars, we will be tweeting out registration for those. So, yes, and please check our pages on SlideShare and YouTube. We have listed here. Before you sign off, we'd like to ask you to take a brief survey about today's webinar. As we research performance of technology companies, we're also studying how we're helping our clients, and your feedback would be greatly appreciated. We'll leave the chat function open for a few minutes to give folks a chance to ask any last-minute questions, and we'll see you again next quarter.